So the first panel is entitled Attracting Debt and Equity Investment, Investment Readiness, and Investor Priorities. This panel will be moderated by Shveta Sarin, a business development advisor responsible for clean cooking at Shell Foundation. So without further ado, I will say farewell in this opening segment and turn it over to you, Shveta.
Thank you very much, Peter, and thank you to Michael, Kitty, Athena, and Dimphna for really helping set the context of the issue of clean cooking and relating that to other important issues of health, gender, and climate. Good morning, good afternoon, and good evening to everyone joining us from various parts of the world for this event today. Thank you all for participating in this conversation, and a big thank you to the Clean Cooking Alliance and GET.invest for organizing this very important event and leading the way on advancing the discourse for the critical issue as has been highlighted. We have a very interesting discussion lined up with a fantastic group of panelists who have kindly agreed to share their insights on the topic of attracting debt and equity investment, investor readiness, and investor priorities in the clean cooking sector. A most recent report published by the World Bank states that the total cost of transitioning to modern energy cooking services by 2030 for the 4 billion people currently using traditional fuels for cooking is approximately $1.5 trillion US, or about 150 billion annually over the next 10 years. The private sector here has two important roles to play. There's a need for downstream infrastructure development to serve this target population, which will require approximately $11 billion annually, as well as designing of appropriate products, technologies, consumer financing options for households to contribute an approximate sum of about 103 billion per year to pay for these. Now, this clearly highlights the commercial opportunity within this untapped and underserved market. Further, COVID-19 pandemic has highlighted that among all types of energy services, demand for cooking has been the most resilient, and that largely there has been an uptake of cook stoves and fuels. At the back of this, in the recent years, there have been funds set up, acquisitions made, technologies developed, business models tested that have advanced the sector from a commercial point of view in terms of insights, data, and lessons learned. Today, we have the fortune to hear from my esteemed panelists who have a wide range of experiences in the sector and have also made firm commitments to a future in this evolving space. We'll be specifically discussing how the clean cooking sector can be attractive and prepared for greater debt and equity investments, and what the overall investor priorities are when they're assessing opportunities. So without further ado, I would like to hand it over to our panel, who I will let introduce themselves. And again, thank you very much for your time today and agreeing to share your valuable insights. We also look forward to participant questions at the end of the discussion. Over to you, and maybe we can start with Hanaan.
Great, thank you so much, Shveta, and many thanks to the Alliance for organizing this event. My name is Hanaan Marwah, and I'm Head of Business Development and Investment at Circle Gas Limited. Circle Gas is a pay-as-you-go LPG distributor and retailer, and with presence in Kenya, Tanzania, the UK, and manufacturing capabilities in China. Our founding strategic investor is Safaricom, Kenya's leading telecom, and the goal of the business is to increase the affordability of LPG beyond just what has traditionally been advanced by pay-as-you-go, which is the ability to access LPG without refilling a whole cylinder. We also provide the equipment that a customer would need to be able to access LPG so that a customer really only has to pay as they cook. Thanks so much.
Can I invite Jeannetta to also introduce herself, please?
Hi, everyone. My name is Jeannetta Craigwell-Graham. I'm a senior expert with the GET.invest Finance Catalyst. which, as Michael Franz introduced earlier, we support companies and projects in the renewable energy, small-scale renewable energy and cooking sector. And I specifically have clients in the cooking sector that I support with gaining access to finance. So it's great to be here, and hope to talk with many of you in the matchmaking event as well.
Xavier?
Hello, good afternoon, good morning. Shveta, Jeannetta, Hanaan, David, and all participants, as well as Clean Cooking Alliance and GET.invest. Thanks a lot for having all of us today and having me specifically in this panel. So Xavier Pierluca, I'm a managing partner at Enabling Qapital. Enabling Qapital is an asset management firm involved with the design, structuring, fundraising, management of impact investment funds. We are focusing currently our attention on financial inclusion. We manage an open-ended fund that works with microfinance, SME banks, fintech companies globally, and also on the very specific topic of the day of clean cooking. On that note, so we've been working in close collaboration with the Clean Cooking Alliance in the design, the fundraising of the Spark Plus Fund. We are very thankful now for the support of the African Development Bank and the European Commission throughout these last month, and hopefully are looking forward to closing the fund in Q1 of next year. I will discuss later on a bit in greater detail on the strategy of the fund, but it's a debt and equity structure with an ecosystemic approach to clean cooking. It is structured as a blended finance vehicle, meaning that we are working with public institutions as well as development finance institutions. And in order to attract commercial investors such as pension funds and insurance companies in the early stages of the financing of the new, I would say, version of the clean cooking sector currently. So we hope to launch in Q1, and look forward to the discussion.
Thank you. And last but not the least, David.
Thanks, Shveta. And it's great to be here. Great to see everybody. My name is David Malouf. I work in the Chief Investment Officer's office at Acumen, based in New York. Acumen is a global nonprofit venture capital fund. We've been investing in the clean cooking sector for the last 6 years or so. Currently, with our investment in Burn Manufacturing, and currently have 5 portfolio companies in the sector. I think it's a really exciting sector. It's great to be here with you all, and excited to be discussing it more.
Great. Thank you, everyone, for being here. We're really excited to have you here and have a discussion. To start the discussion, I think it would be good to understand from your perspective and unique views, given all of your organization's roles, what the state of the sector is and where do you think it is headed? And to begin, maybe we can go around the table and start with David.
Yeah, absolutely. So as a number of other panelists have mentioned, we think the sector has a ton of potential from an impact perspective. We did a study of our own portfolio companies a few years ago on the impact of various energy strategies, and found that clean cooking outperformed our benchmarks by 100% plus on quality of life improvement and time saving. We think from a commercial perspective, there's still a lot of business model strategy that needs to be proved out. We think there's kind of 3 areas that need refinement. The first is refinement of financing strategies. Some things we're looking at are the viability of pay-go and on-bill financing for EPCs. The second is refinement of products, particularly product market fit. Acumen has a long history investing in lighting, and we find that with clean cooking, it's much more difficult to get behavior change among consumers as opposed to with lighting. And the third is refinement of distribution, which we think is really important for LPG particularly, and figuring out business models and strategies to effectively make LPG distribution cost effective. So broadly, we think those are kind of the three areas that need to be refined. We think the sector has a lot of potential, but sort of continues to need capital to develop the core segments of those three business model concepts.
Thank you, David. I'd like to invite Xavier to comment on that as well.
Yeah, I mean, I'll be a bit more general, no? As we are as well engaged in the fundraising, been engaged in the fundraising for the last few months, dealing with investors, impact investors, development finance institutions, as well as commercial investors. And the unique thing about where clean cooking is at today is that it's not what it used to be, right? And unfortunately, you know, very often when we engage with some still DFIs as well as other investors about the topic of clean cooking, they still have, you know, this thing of the past that clean cooking is all about cook stoves that were given away, you know, for free to recipients and not utilized. Unfortunately, we now, you know, have in that sector lots of very innovative and driven entrepreneurs that have understood that they need to produce products, you know, that are going to be appealing and affordable for the clients in order to grow their business and that are commercially driven. So this is being, of course, facilitated no, by the development of technology and pay-go as well, like we have seen in solar, but also the rise of credit in order to further the affordability. And like David indicated, we can't, you know, have a one-size-fits-all approach to financing for the sector. We are dealing here now with several value chains, and the goal now of our fund and the goal of investor in the space is to provide long-term support, but also participate now at each and every section of the value chain in order to bring the clean cooking sector to the next level, I would say.
Definitely, very interesting points. Jeannetta.
I think I was here, interesting enough, 2 years ago in Kigali when we launched our advisory services in the cook stove sector. And it was really exciting because we were trying to solicit the first companies to kind of come into our intake. And now it's interesting to be here 2 years later in a very different environment. And to think about what we were discussing on the panel back then, which was also a financier-related panel, to what I'm thinking about saying now as 2 years on and having some experience with working with some of the companies. From what I can see is that the one thing I was thinking about it in terms of, you know, there is an importance to looking at like the impact factors of the sector and the SDGs, et cetera. And that's certainly, you know, a compelling reason for someone, an entrepreneur, to decide to engage to try to solve some of these big problems. When we talk about financing, there's also compelling justification for, as many people have mentioned, just having a business that makes sense, that can earn revenues, that can provide an exit, that can satisfy the needs of your customers, very similar to any other business in the world. So I see, in terms of the companies I'm working with, those that are cognizant of the powerful impact that their products can have on people's lives, but also the orientation around, you know, what do I need to sell that will work within my customers, and getting into that feedback loop of understanding really how to make a business out of this very big problem. And I think that's very encouraging. I also see that there's just a general professionalization that's going on as these companies are hitting this, what I would say, growth scaling stage. That's the critical point where we shift away from maybe doing things as we needed to do them when we were building it, and really starting to really put in the work to be investment ready. So a lot of the businesses are at this critical function where they're going to take the leap to do their Series A, or perhaps they've already raised some seed equity. So that things need to get a lot more professional, and in terms of a lot of different aspects of how they run their business. So that's been really encouraging to see as well. Yeah.
Certainly, yeah. And finally, Hanaan, would you also like to comment on this?
Thanks, and I agree with what many of the other panelists have said, but taking a slightly different viewpoint, I see the sector at a tremendous inflection point. I just see so many things changing now that were not the case 2 or 3 years ago. So I'm actually, I see many of the barriers, but also I do see things starting to change in many ways, and the attention of kind of the global financing community in particular, I believe is starting to and will in the coming couple of years really pay attention to clean cooking in a way that they haven't before. My own background is I come from infrastructure financing, and worked a lot on electrification and energy access projects, and the hundreds of millions of dollars that get put into those projects. And I can see that certain critical things like the World Bank Clean Cooking Fund announcement and the Spark Plus fund that Xavier has and the Clean Cooking Alliance have brought to fruition, and the emergence of really sustainable business models, and not just Circle Gas, but a number of others as well, that because of a development of technology just couldn't have been possible 5 years ago. And also in particular with LPG, I just have seen the pricing trends with LPG becoming cheaper relative to its dirty fuel alternatives in more and more countries over the last few years. So I think the commercial case is getting stronger and stronger because of the environmental imperatives, the regulatory imperatives, and growing awareness amongst regulatory bodies. VAT is being removed on the right things and put on the wrong things, and in a good way. So I think the commercial, the financing attention and the commercial fundamentals, I really feel that they're starting to fall into place. And then in 2 years' time, we'll be having a very different conversation. I mean, from the perspective of Circle Gas, what was so interesting about when the last big fundraising round that we did was that we raised enough capital to demonstrate what we thought was commercial viability, or what our investors thought was commercial viability at a certain scale, even to the 35,000 customer level. And things are so far going really well. But then the question is, now where do we go from here? Is that enough? And what level is enough to be able to convince a big infrastructure fund or a DFI that that debt is suitable for this business, equity is suitable for this business? And there just have been so few clean cooking companies that have even gotten to that scale. There's no clear path of where to go. So I mean, I'm looking forward to many interesting discussions today and also over the coming months with many of our colleagues. But I feel that things are changing now. Thanks.
Yeah, thank you, everyone. And I think one I would just like to sort of point out my observations from across all of the panelists. I think what is clear is that what was the conversation about a few years back is not the conversation now, especially in the business community, with a growing recognition around the commercial sense of clean cooking as not necessarily a giveaway, but an actual business model where the aspirational value of it, and how do you the payment mechanisms with pay as you go, how do you ensure that the distribution or the last mile distribution is robust enough. And so, I think that what's clear is that what a lot has changed, and a lot is now in an accelerated way is going to change. So, we likely have a dramatically different conversation to your point, Hanaan, in the next 2 years. And what Jeannetta, as you'd mentioned about the professionalism, there are now quite a few, I wouldn't say a whole suite as much as we think that the need is, but quite a few businesses that are, larger in nature, or in many startups as well, who are looking at it from a very sort of core business fundamental perspective, where there's an entire commercial strategy, fundraising strategy, So I think that there is, from a business perspective or from a business community perspective, a growing understanding of what this opportunity is. And so with that, on the back of that, I think, I would like to ask you, Xavier, a question. Specifically, given your experience in the off-grid sector, what do you think are the comparisons, in a sense, of similarities and differences with more mature energy subsectors, such as solar home system? And can you highlight some key lessons learned that can provide other energy sector investors some greater insights into the clean cooking sector?
Okay, yeah, that's so thanks, Shveta. I think, of course, we cannot make a complete parallel, between the grid solar sector and the clean cooking sectors, subsectors, taking into consideration that on one hand, now we're dealing with one source of energy, and on the other hand, we're dealing with several types of fuels and distinct value chains, of course. This being said, of course, we are dealing with similarities in the sense that we're targeting the same clientele, generally speaking. And clean cooking and access to electricity or off-grid solar is always seeking to make sure that they can basically, first of all, generate a product that is appealing to the clients and that is priced right. So priced right through proper manufacturing, proper distribution, but also proper financing. What we've seen in the off-grid solar space 7 years ago is probably what we're starting to see now in the clean cooking sectors, subsectors. If we want to think about it, with biomass, biogas, LPG, ethanol, etc. The issue, we feel that the off-grid solar space faced because it was starting up is this issue of vertical integration, that one company is aiming at achieving it all in one go, right? So on one income statement, one balance sheet, basically with one income statement and balance sheet, there are, these companies have been running, designing, making manufactured products in most cases, distribution, financing, monitoring of the clients, etc. Where in reality, if you delve a little bit deeper into the off-grid solar space, many of these companies can focus on what they do best, either the designing and manufacturing of goods, the distribution, the financing, potentially, the supply of the raw material as well, in some cases. So as a result of if you'd like, what we've seen in the grid solar debt space, and we started in that sector to think, in an ecosystemic way, meaning that how can we finance, the raw material parts that are needed for the manufacturing of these goods? How can we finance the distributors of products? And how can we engage financial intermediary companies, microfinance companies, SME banks, in the sector such that they want to take a risk with what is so far has been basically public money or very specialized funds. So the Spark Plus Fund, on the basis of what we learned in the grid solar space, has been, and we don't know if we're right, I mean, we think we are, but we need to demonstrate it. But our aim is to, okay, let's engage, with across the value chain. It's a 7-year fund. Let's provide quasi-equity capital, long-term capital to the clean cooking companies, the ones that are really designing, thinking about the products, the distribution of fuels to the end client. And let's also provide, the working capital, receivable finance, inventory finance, tripartite, distribution products, in order to engage the other actors alongside the value chain. Of course, with the goal of furthering the outreach of clean cooking. And we feel that if we can demonstrate successfully, that first of all, I mean, the clean cooking companies are sustainable, and this approach, is actually driving further outreach. We hope that we can attract other players. At the end of the day, the concept is not to be a venture capital fund, where we are not engaging with that, if you like, hat. We're really engaging with how can we further develop the sector such that we can attract, direct financing from other, impact investors and commercial investors throughout the value chain alongside us, and to further develop all of these subsectors. So that is the goal of the fund. Today it's 50 to 70 million target. So it's quite small if you think at what is required, Shveta, by your introduction. But we don't want to be the only one, right? I mean, we hope to be accompanied by many with this approach.
Certainly, I think you made a few really interesting points, especially as you link to the idea of vertical integration and why a lot of the companies feel the need to sort of play a role in every part of the value chain. It's interesting because as you talk about an ecosystem with various different stakeholders and players, there is a role for different solutions and similarly a role for different types of financing. So when we talk about an ecosystem, I think it's clear that we need to sort of think about the technology solutions, the business models, but we also need to think about the financing required for all of these. And obviously the financing required for various different elements of the value chain looks and behaves a little bit differently. So I think, very good points made there. My next question is for David, and this is really just to understand which business models and technologies do you think are the most attractive, both from a financial and a social impact perspective?
It's interesting to hear both of you talk about the sort of desegmentation of the value chain for clean cooking. I think that's something that we're super interested in as well from an impact and returns perspective. So the three areas that we think are most exciting for investments right now in clean cooking is one, financing technology for clean cooking and different financing alternatives, either built on microloans or group financing or on-bill financing. Second is distribution, particularly LPG distribution and business models surrounding, purely, not necessarily production, but purely getting it to last mile consumers, especially in rural areas, which we think is kind of an overlooked community in the clean cooking environment. And third is EPC development, which for us, given our experience in energy, we think there's a lot of potential to do that through mini grids, where basically EPCs could be used to kind of increase the average revenue per user for mini grids, which is an issue that a lot of mini grid companies have been working on for a long time. So we think those kind of three things are where we're looking now and where we're allocating capital. We've deployed investments and grants in all those sectors. The grants are mostly centered on trying to find the right product market fit around EPCs, because that just continues to be an issue. I think, as other panelists have pointed out, historically in clean cooking, they've given away these pressure cookers. People have not been, sort of used them, but not really been excited about them. And so trying to find a product that consumers really like and are also not just stove stacking on top of, which is another issue that we run into a lot, where something like 70% of the EPCs we distribute, we found customers are also using another type of stove, like a dirtier stove. And so finding something that people just really love and can actually replace what they're used to. So for us, it's those three that kind of center, we're sort of focused on from a financial and social impact perspective.
It's interesting that you bring up the topic of mini grids and EPCs, because it actually alludes to a bigger conversation just in terms of the integration of energy services. So essentially, Minigrid is an electricity supplier, and it struggles with optimum usage of electricity. So the demand management of that, and cooking is basically solving for that. And those two business models having actually a role to play in tandem with each other. But the other thing that's also interesting that you bring up is that one of the biggest things or challenges right now, especially if you look at the EPC type of model, is behavior change. But it actually cuts across, across the entire spectrum of clean cooking solutions. Because if we are producing products and services and technologies that are ultimately for the users that they would be paying for these services, we have to keep the usage of the customer and their behavior central to what we're building. So it's a different approach when you're giving away a product in that format versus when you're building a business that you need folks to pay for what you buy. I just wanted to quickly invite the participants to provide questions if they have any on the side, and not necessarily wait for the end. We'll take the questions at the end, but feel free to comment in the Q&A section of the Zoom meeting. Moving on, I had a question for Hanaan. Hanaan, Circle Gas's acquisition of Copagas has till date been the biggest pure private sector play in the clean cooking space. Now, what have been the key milestones achieved in terms of scale that are further shaping or changing the approach to investors, and what's coming up?
Thanks, Shveta. It's very interesting because in January, when that transaction to acquire Copa Technologies happened, and in the further round that our existing shareholders have supported, what's interesting about it is it combined probably 5 or 6 things, which most young startups in the sector have to do sequentially because of the progress that Copagas had already made, which included financing for people like Acumen. We were able to get a technology that had already been tested for several years in Tanzania. That was the Copagas technology. We were able to combine that with enough capital to get to a fairly sizable demonstration of commercial scale. And also the bringing on board of a really key strategic commercial partner who was very embedded in the local environment, which was Safaricom of Kenya. And I'll just spend another minute on that because, of course, no one understands the low-income consumer and believes in their spending power like the telecom industry. So having them as an anchor investor in that big fundraising and gave comfort to everyone, and also set really the ambition for scale for the company because they're everywhere in Kenya, and they many of the things that people see as barriers of scale, they've kind of solved those and have a big operation. And of course, they're not only an investor, they're also they're a brand partner. That we have an operating and services agreement with them. So I think their participation in that transaction was really important and will also be a further signal for other investors in future rounds. Also, because the acquisition included some manufacturing capabilities and some backwards integration of something which has been a key industry bottleneck, that was also important because for this, to actually spend the money that was raised to acquire the 20,000 and then 35,000 customers, we needed to have confidence that we would get those 20,000 meters, smart meters, on time and on budget, and we've managed to do that even through COVID and everything, and really that was because we controlled that supply chain, and I completely take on board the point that Xavier made about how companies in this sector, as in the solar home systems sector, don't have to do everything, but where there are key industry bottlenecks. And this was one of them for us. We really had to manage it and have to manage it until it's a commodity and anyone can buy it. And that's the smart meter. And the other thing I would say is management. We have a management team on board that have managed really huge billion-dollar companies before. And I think that's as well as some of the original founders in the clean, of entrepreneurs in the clean cooking sector, like the original founders of Copagas, they're also part of our business as well. So I would say our management team is a combination of kind of really massive company experience who managed thousands and thousands of employees before, as well as really deep clean cooking knowledge. And I think that also gave confidence to the investors.
Thanks, Hanaan. I think the key points here, which I just wanted to sort of highlight, were the ability to understand that there is a value add with a tangential sector, for example, telecom in your case. The clean cooking sector, especially because the ultimate objective is to provide last mile distribution and really have a deeper understanding of the end customer. I think that the sector can look to various other tangential sectors that might have a role to play. So telecom being one, but there are a few others that I can think of who might be good partners. And in a way, it solves for two or three things. One is last mile distribution, but also thinking about how do you create multiple revenue streams for a tangential business. And I think that one key point that you also mentioned was the fact that for a company like Circle Gas, it was important to recognize that that the manufacturing capability or that is a bottleneck, and that you would choose to vertically integrate in that. And what that to me alludes to the fact is that all of the different businesses, depending on where they have understood their key value, it really isn't one size fit all. There are different formats of how businesses can play a role, which means that you could. If you are solving for something that requires vertical integration, that's probably the right way to go, versus if you are, let's say a pure tech play, and that's basically what you need to do, then, there may be a role to play to not vertically integrate. So thank you for that. I guess moving on to Jeannetta. My question for you is, how do you think clean cooking companies should prioritize elements within investment readiness, and which elements can have the biggest impact in terms of addressing investor priorities in your experience?
I think many of them have been said by three other panelists when we talk about product market fit. She mentioned management, which is one of the key parts I was going to bring up. People want to know and feel confident about who is steering the ship. We've talked about growth and how, she was just mentioning selling a big idea, selling a big vision for how you're going to really scale this and how you're going to unlock it. But as everyone was speaking, I was considering that an important piece of this, which I think was also maybe brought up a couple of years ago, but has continued to evolve, is that these comparisons to the solar home system industry offer a lot of value in terms of lessons learned and things to kind of look at in terms of how, a company seeking to grow and also raise finance, how they sell, how they kind of understand what the client wants, how they deal with technology, and how they seek to develop that. And it's actually a gift that you have an industry that's kind of a bit further along, roughly, kind of has some of the same challenges that this sector can actually learn from and iterate from it and actually grow and position themselves to be much better ready for investment than maybe some of those companies were, but they were doing some really groundbreaking things on the ground. So I think it's quite interesting to kind of feed in a lot of those lessons, especially around, someone mentioned distribution challenges, technology fit, investment, vertical integration, and really figure out what things went wrong and what things went well, and feed that into what you're doing. Because a lot of the same players have had some exposure now and have exposure on their balance sheets to these companies. So they're going to come to the table and ask you some of these questions and be a lot more informed. And companies should really be prepared to answer these questions. And you can kind of reference some of the challenges that sector has had as a starting point in terms of figuring out whether or not you're ready. So that would be the one part I would add in along with everyone else, what they've said.
And I think what's interesting is because there is a sector that's sort of, just gone through the same trajectory, likely there is a lot of overlap in terms of, the financing for it. So there are folks who may have financed that, a few years back and now are looking at this, so likely are looking for trends or similarities or differences, etc. But also human capital. So, someone who's done it and actually built something or financed it is likely sitting in the same rooms or having the same conversations. So there are, quite a lot of sort of overlaps and lessons learned, and, we need to be mindful of keeping our eyes and ears open, but also recognize what might not necessarily be similarities, because as has been alluded in various different conversations here, that while there are quite a bit of sort of overlaps and lessons learned, the important recognition is also that the electricity has a very different behavior as in terms of the end customer, while cooking might have different types of needs. I will move on to the next set of questions, and maybe I'll start again with Jeannetta on this one. What would you recommend to a company in the sector seeking capital as they develop investor leads, and what is the approach and how can they be most effective?
I would say put as small, medium-sized and growing companies, we all, at least I'm speaking on behalf of my clients, have largely gotten to where we are because of strategic partnerships or collaborations. And so really when it seems that we shift our hat, when we're talking investors, we put on an investor hat and we have a partnership hat, but it really is the same hat. You really need to look at an investor as a partner and really feel that they're coming to the table with value similar to you might find another strategic partner. I loved how Hanaan was talking about how they found the telecom as a really strategic partner and very clear reasons for why. I know we are all at various stages and we need capital, but all capital is not equal. You really need to kind of first look to see what you'd like to gain out of the relationship, and I think that's important. Investors as well all have their own value propositions and their own business models and what they add to the table. And so you should really understand where they are positioning themselves and whether or not that aligns with what you want. I would say also, especially because the ticket sizes that a lot of our clients are looking for are quite small, you may start out with a very, very long list and an ambitious list. And a lot of the people that you talk to are maybe not interested in speaking with you at this stage. Keep those relationships, continue that, and keep that pretty tight. Keep a pretty tight circle around that too. Don't cast a wide net and expect to have really deep relationships with everyone, but try to develop close relationships with a few or several financiers who you think that would be better placed for when you do need capital within their range, or they're doing something, or they've invested in companies that you kind of think are very similar to what you're doing. So those are all kind of things to keep in mind when you're thinking of who you're looking to invest in your company, or you're looking for a partner.
Excellent. Yeah, I mean, I think it's clear that all money is not equal, and that investors have really in many ways quite a strategic role to play in terms of the future of the company. So making that selection quite carefully in terms of where you want to head as an entrepreneur with your business, and matching that with the type of investor, and then what they bring to the table is I think, while we recognize that financing is a challenge, it still needs to be considered quite strongly. So I think that's a really great point. And actually leads me to my second question, which is for Hanaan. Where should the sector look to expand its sources of financing? And is there a space for clean cooking companies within larger investment pension funds, which are used to just looking at categories like infrastructure, consumer, technology, logistics, etc.?
Thanks, Shveta. I think it's a great question. And the way I anticipate things to happen is I'm thinking in terms of two phases. For our business at Circle Gas, I feel that we have a really strong commercial proposition. And I think what we've done so far demonstrates that. But what we are, of course, lacking is track record. Having the critical mass of customers for a long enough period of time that a commercial bank or someone would say, oh, yes, I'm confident that your customers will upload on mobile payments 3 times a day and this much per month. And I can see over the past 2-3 years, they behave this way and have confidence in that in the future. We don't have that. We're building that as we speak. So I think that there's, looking forward a year, I think us and others in the industry who do have a very strong commercial proposition will have a very good case to be able to knock on a number of doors. And this is certainly a combination, or our business is certainly a combination of infrastructure and consumer, and with a bit of logistics as well. And so I think that in a way that's an opportunity because, yes, there's the risk that you fall between the cracks, but it also means there's a huge range of people that I think once we have a bit more track record, we could go to them. That's phase 2. Phase 1 is what do we do for the next 12 months while we're really demonstrating the track record. And I think that that's really where the development and impact funds can really demonstrate huge additionality because us and others in the sector, we really need them now to be able to write bigger ticket sizes, to be able to take some risk that others in the sector can't take. And I know that that's their mandate as well, and they want to do that and they want to support the sector. So that certainly will be looking to interact a lot with the development community, not in the same way that many people did a number of years ago with maybe sub-commercial models that needed a subsidy or for very small tickets to advance some technology. But hopefully for this scale-up phase, I think there's really a role for them to play in bringing this to something which can be brought to the wider investment community. But I'm confident that it will get there.
I would say that the whole sector is then looking at Circle Gas to set the way on so many of these, and I think that on many of the challenges that you've highlighted, for financing entities, I think many sectors would have started from scratch. So there are sectors that are built, and this is probably the starting point for ours. My next question is for David, and that's, I guess, specific to Acumen. How does Acumen view this sector versus similar sectors that it invests in? And what is the role of patient capital in accelerating the growth of the sector?
I think it's interesting. We've talked a lot about the sector as comparable to off-grid energy, and I think for obvious reasons it's closely adjacent. I think from Acumen's perspective, we see it as very comparable to energy. We also see it very comparable to some of our investments in agriculture and agriculture technology for smallholder farmers. As we've talked about with certain companies being forced to or trying to vertically integrate fully in the sector and having to do every component of financing, distribution, product development, et cetera. That was something that we saw for a long time in our agriculture investments, particularly in India. And it's very difficult for companies to sort of overcome all of those barriers and basically be like infrastructure companies as well as technology companies, as well as consumer companies. And so slowly that disaggregation has made the sector sort of more and more viable and more commercially powerful. So I think there's an interesting comparison there as well, with our prior investment experience. From the perspective of the role of patient capital, right now we've deployed a decent amount of capital through our relationship with Modern Energy Cooking Solutions and DFID to define product market fit for EPCs particularly. And I think that in general, what patient capital can be really useful for here is the R&D side and fit side of clean cooking, with sort of defining businesses, helping them make sure their products are ready to go and they've got their business model lined up before more commercial investors come in and say, okay, like it's time to scale. We also help, as you know, as you were talking about, we also help with kind of professionalization of management teams, accounting, all of that, so that they sort of got all their ducks in a row, so it's easier for other investors to come in. And I'll say also, I think that, you know, patient capital on the tech side and R&D side is valuable in disrupting that stove stacking thing I was talking about before, as well as really getting customers to use these products for a long time. Something that we've seen historically is that approximately 1/5 of the EPCs sold by some of our portfolio companies, customers have stopped using after like 3 or 4 months. And so getting to the point where that's not true, the products are really great and people, you know, really love them, I think are all really powerful roles of patient capital.
Yeah, so we need, I guess, Acumen to be around and make the sector more commercially viable and get more sort of stronger commercial play to sort of take place. Hopefully in the next few years, we'll see a lot more activity. And then my final question is for Xavier, and this is really around the role of industry level data in advancing investments in the sector. What do you think is currently missing?
Yeah, so that's we believe this is quite essential, no? And I'm gonna start from the microfinance years, right? 15, 20 years ago, when commercial microfinance really, I would say, started, no? And off-grid solar as well. The first element now that we see missing, generally speaking, is some homogeneity when we look at financial indicators, generally speaking. And let me backtrack a bit, but I'm starting with the belief, which might be wrong, which is probably wrong, but let's start with the belief that we are dealing with one clean cooking sector, right? So it might not be possible to consider, you know, one clean cooking sector. We might have to look at the biomass sector, the ethanol sector, the LPG PEGO sector, whatever, right? But let's start with the belief that it's possible. If it's not, we'll look at the subsectors, but it applies nonetheless, no? So if it is possible, no, we need more homogeneity vis-a-vis financial indicators that are provided to investors, in the sense that investors don't like to think much, no? Especially, you know, commercial investors and large ticket sizes coming from pension funds, insurance companies. They're not going to have the time, you know, like specialized funds, to dig, you know, deeper into understanding the business models of each and every player and the nitty-gritty of why they use, you know, this very specific and unique financial indicator that they have never heard of before, probably. No? I think the second element is we need to be able, no, with some level of homogenization of financial indicators, to benchmark as well. Benchmarking is essential for investors, right? I mean, if you're not able to benchmark one company vis-a-vis its peers, no, it's difficult for you as an investor to make sense of who am I dealing with, no? Am I dealing with a player that is on a successful track, or am I dealing with, I don't know, just, you know, any other company that I should probably avoid investing in at this stage? And the third point is transparency of data, no? Access to information, making it transparent. The belief that I have and that we have is that it's only when we would have achieved, you know, these three components, somehow for the clean cooking sector that we will be able to attract the big money to the sector itself. If you look at the world of mainstream the mainstream financial world, you have business analysts that are tracking companies, that are tracking sectors on an ongoing basis, that are reporting on the trends and the key success factors, etc. The strategies and what are the new technologies. This is definitely, I think, some work that the Clean Cooking Alliance has started to work a lot on by further developing the description of the value chain in an in-depth manner. And I think Peter touched upon that during his introduction, and it's quite essential. But when you look back at microfinance, you remember, I don't know if some of you know about the mixed market. The mixed market was that database that had been designed by the World Bank, where all microfinance players were providing transparent information to basically the quality of their assets, the size of their balance sheet, their revenues, the type of clients they were working with, targeting, etc. This is what drove microfinance to become what it is today, right? I mean, look at the funds that are being managed. You're looking at $2 billion, $3 billion, $4 billion. This is, one topic that Google has aimed at tackling as well. If you look at the off-grid solar companies today, the ratios that they use is much more homogeneous, than what it used to be several years ago. 5-7 years ago, they were all using different indicators to track the quality of the assets. We are moving into the direction of, homogenization of that data, but it's still not enough in off-grid solar space. So the question that I have is, can we fast track, the same for clean cooking? Is it possible? And maybe what I started with, the premise that we have one clean cooking sector is wrong. I'm very much willing to agree that I'm wrong on that one. But how do we deal with it is the question. I don't have the answer, but I think this is the question that needs to be tackled to get the big money, big tickets, big investors to the table and to achieve the goals that we are aiming for, within the forthcoming 10 years.
Yeah, I think very valuable points that you made. I mean, money or investment comes in when there is less opaqueness or, less mystery around, what the business is or the commercial opportunity is. The more you have the ability to articulate that in terms of trends, in terms of value chain, in terms of what the different players are and where the value really lies. Similar to, as you mentioned, the mainstream, commercial investing that happens across various other more advanced developed sectors. There's a whole range of data tracking, information tracking that if we are able to sort of somehow quickly bring to our space, hopefully there would be less risk, a less feeling of risk because of not knowing, what the opportunity really looks like. So I think that's very, very valuable. I do see a few questions that have come up from the audience. So I'll start with the questions and panelists, whoever feels most comfortable to answer, feel free. So the first question is, do you think SDG 7 will be truly achieved in any sub-Saharan country by 2030? And if so, which ones are the most likely? Anyone?
I can jump in here. So I think, very, very unlikely, unfortunately. I think SE for All is actually about to release their report, I think on Thursday, about energizing finance, and I think we're going to see that we're very far off. I think the reason there is that, although we made great gains in markets like Kenya, which is really exciting, a lot of hard to reach markets like Burundi and South Sudan barely have kind of energy sectors and accessible energy sectors. And so the amount of catch up required is is really substantial. So I'd say that's, you know, sort of broadly my perspective.
I would just maybe to give a structured answer. SDG 7 will be achieved first in countries that have a really good grid electricity sector and a lot or an increasing LPG use as probably the quickest. This is my view. The quickest way to scale up clean cooking. So in the countries where those are in place and improving quickly, those are going to be the places that are most likely. I mean, just brainstorming. I mean, for example, Côte d'Ivoire has significant power generation capacity, and I think in their urban areas, LPG use is very high. So those would be sort of the indicators that I would look for that would have the highest potential to kind of, with the right planning, to kind of be able to achieve that.
Yeah, and I would say then, you know, in that sense, government policy plays a pretty big role to actually accelerate or even facilitate, you know, reasonable private sector play. I have another question. Just what milestones do we need to see in e-cooking in order to see an investable opportunity with electric cooking? And do panelists think there is even a future for investments in electric cooking? Anyone?
I can go first on this one too. I think there's you know, real potential and a future for I think yes, there's a future for electric cooking. I think the milestones we really need to see are kind of the product market fit discussion we were talking about earlier, where consumers, you know, are not stacking the stoves. They really find, you know, the e-cooker really displaces and replaces the older, dirtier technologies that they historically have been using. I think that's a key milestone. I think also scale and distribution capability, like not just fit, but then also, you know, ability to sell at scale and make the economics work. But yeah, I think there's super exciting potential for EPCs.
Yeah, I mean, I concur. I would say that on top of that, we have existing companies now in the off-grid solar space. I mean, evolving in microgrids, mini-grids, solar home systems, business models that are capable, you know, and have the capabilities to distribute these products already. It's just an additional appliance, no? Hopefully that they should be selling to their clients down the line. Well, we can discuss the batteries, we can discuss the so many different concepts now in detail, but yeah, that there is definitely hope, no? That electric cooking can grow fast with the installed capacity that we already have on the ground.
I'll just add.
You go ahead, go ahead, Jeannetta.
I would just add, I think that it becomes investable, as Xavier is mentioning, when it's on top of a very strong distributor model, which I feel is kind of exciting in the sector to see those that are actually more customer oriented. So they're demonstrating that they really have a customer out there that they've identified that would consume a product like this. So it's not a question of whether or not it's the technology of e-cooking, but more so that they've reached an understanding of the customer, that they've had repeat sales to someone that would be interested in consuming this product or any other product. And so that's the customer side, but also on the operational side that you can see that they have the capacity to distribute this because of systems, processes, logistics, that they really worked out that core. So that would be more how I would conceptualize the question of whether or not a product is an investable product. Yeah.
I would just add that e-cooking is, of course, really dependent on the E and being available. And there are certain countries that are making incredible strides in extending their grid, and Kenya is one of them. And I believe that is really very much going to be a huge part of the future. But I don't think for many countries it will be 10 years. It will be more like 20 years. So but absolutely believe that's going to be huge in the future. The only thing I would reflect on when it comes to combining the clean cooking sector with electrification or mini grids or solar home systems is that I think just as a sector, we need to be careful. I think that many clean cooking businesses have such strong fundamentals on their own. There is actually could be a risk of dilution of combining them with maybe something else that doesn't have such strong fundamentals. I'm not sure that it's always. I'm not sure that it's always needed for clean cooking companies to latch on to other maybe quite different business models. And maybe in some cases it is, but not always.
Fair enough. One of the things that I think about, especially in terms of electric cooking, is that, granted that it is a longer term horizon, and we expect that this would likely be the way that it would turn out in the future. But if the biggest challenge is behavior change, because people don't know yet how to cook with electricity, and if the business opportunity is to build the products right now, which would have a likely, we've seen, the world has seen quite a bit of new behaviors that have, been adopted in various different ways and formats. So I think we need to sort of maybe take a page from the book of like how that has happened in other spaces and build those products very, very central around tackling the challenge of behavior change and adoption as we think about investable clean cooking businesses in the future. There's another question that's come up, which is, will customer financing from microloans require significant behavior change interventions for last mile customers? And who is best positioned to provide this training and intervention?
Maybe I can try. I mean, I do not know who is best, positioned, but there are several, consultants, advisors, and firms out there that have been dealing with microfinancing and micro asset financing as well, over the last 2 decades, to make sure that we can work with them in order to engage in the financing of clean cooking products, solutions, generally speaking. It is already the case now with the off-grid solar products, right? I mean, there are many microfinance companies in Asia and Africa that engage in the financing of Pico Solar and to a certain extent some solar home systems as well. This is already happening with some clean cooking to an extent, with biomass products mainly, but also with the financing of biodigesters, which we see in Africa. So I do not think that this would be much of an issue. This being said, as usual, right, the concept of laziness is not to be discounted. Microfinance companies are also lazy, so they tend to focus first on what is allows them to place with clients in the easiest way possible. So indeed, some financing will need to be provided to these companies with the proper advisory in order for them to engage with clients on the ground. The understanding that we have as well from the Clean Cooking Alliance Venture Catalyst and Technical Assistance Facility is that this is one of the avenues that they're thinking about to further develop the outreach of the financing of clean cooking. And I assume that there are other programs that will allow us to get into this direction.
I would just add in, I actually have a client that's working within this with a local financing institution, so a local bank that has an existing product that they're working on a partnership with them to try to avail this product, which has provided asset financing for their clients for many years at the rural last mile distributor level in the urban areas across this whole country. And The big curve there, of course, is explaining the product and getting some understanding from the local banks about what this product is, the benefits, and why their clients would be interested in taking this product. So that is an incredible hurdle. However, many of these local banks have a lot of these kind of micro loan products, which they are very experienced and capable and feel comfortable with their customers and their credit screening processes to avail these kind of loans to them. So you have that benefit, but then you have a significant hurdle to explain the sector, the product, why someone would buy this, why they should be interested, which does make it a bit challenging. But I think with time that maybe we'll see more of those partnerships with local banks who are also facing an increasingly competitive environment and developing their own products, new products, digital products, to compete with each other and to compete for customers. Yeah.
The way that Circle Gas, I guess, interacts with this problem is that Circle Gas, because they provide the equipment, we take the financing. Circle Gas provides the equipment to customers, so Circle Gas takes the financing risk for providing the equipment. And the way that we manage this problem, or the problem of assessing credit and the problem of being incentivized to work with customer training on a new technology and a new fuel, is we have our local depot model where all of our customers are within a couple of kilometers of a local depot with staff there, technicians there, customer service there, a call center, and 24-hour customer service. So we do customer training, and we kind of are incentivized more than anyone else to do it ourselves. So and it's very much a local service. So maybe when the industry evolves and there's much more bank familiarity with these kind of products, the situation will change. But for now, this is the best way we can think of to kind of address that, and I think it's going quite well so far.
Excellent. And I think that, as is the case with any type of consumer financing, as local as you get it refines to its best possible format. So all really great points, and I'm just checking if there are, it doesn't seem like there are any further questions. But just wanted to sort of do a quick wrap up and really thank everyone on the panel for sharing their insights, their experiences, and answering quite a lot of questions that I had, and a few of the ones that came from the participants. I think that the key thing that has emerged, at least for me, from this conversation is that the sector is quite quickly being recognized from a commercial point of view as an opportunity. And there's a lot of thinking around, what needs to happen to accelerate that, whether it's in terms of data trends, or it is in terms of financing capabilities or bringing in different parallel sectors, etc. It's clear that the investor world wants to have a look at it, and it's clear that there are businesses that are very interested in building the right kind of product and build in that professionalism, as Jeannetta was alluding to. So just to conclude, I think that it's in a very, very positive sort of direction. And I think hopefully there are a lot more folks out there around the room who are interested in participating more actively and would like to sort of play a role in the space. But I think that this is a really fantastic start to this conversation, and hopefully it is not the end. So again, thank you very much for your time, and over to the next panel.